This is the Radio Realtors.
I sold a house.
This is a home. This is a place to live. This is a place to live.
Northern California's longest running show on real estate.
Real estate is not just buying and selling houses.
What are you, some kind of real estate agent? Real estate agent?
I love real estate.
Ever since I laid eyes on that house, I wanted it.
The Radio Realtors.
I love every second.
Now, here's your host, Robert Lewis and Frank Crandall.
Let's go and sell some homes.
He's totally crazy. Was not even ready for it. All right, welcome to the Radio Realtors, Northern California's #1 real estate radio show, proudly coming to you live from the Zotex Flooring, Cabinets, and More studios. My name is Robert Lewis, your real estate professor.
And I'm Frank Crandall, your consigliere of real estate. And thanks for tuning in to the Radio Realtors today.
And we want to remind you that you can text us or call us if you're a home seller or a home buyer, or you just have questions or comments, or you want to book an appointment. That number is 833-32-RADIO. That's 833-32-RADIO.
Or online at theradiorealtors.com. That's theradiorealtors.com.
And here at the Radio Realtors, Frank, we don't just discuss real estate.
Yeah, we're doing real estate, Rob.
Yeah, every day. Yeah, and we have a great show for you today, including...
Number 1, 8 ways to beat rising interest rates as a home buyer.
That's right. And 4 reasons higher mortgage interest rates might be a blessing in disguise.
Number 3, our Ask the Inspector segment with Raymond Overton from Hawkeye Home Inspections.
That's right. And then finally, how to divide a house when you're getting a divorce.
Rut-row.
That's exactly right.
So once again, reach out to the Radio Realtors at 833-32-RADIO. That's 833-32-RADIO.
Or you can use our live chat option anytime at our website, radiorealtors.com. That's radiorealtors.com. Now, Frank, mortgage interest rates have been rising throughout this year, and in many ways that's shocking news for home buyers, but it doesn't have to be the end of the road. So on the Radio Realtors today, we're going to discuss some of the best strategies to beat the market and to secure a lower rate for your new home loan.
Okay, the first way to beat rising mortgage interest rates is buy down your rate with points.
Yeah, you can lower your mortgage interest rate by paying for discount points up front. So the way it works is each discount point costs 1% of your loan amount. So if you're wanting to borrow $300,000, for example, one discount point would cost you $3,000 and would typically lower your rate by 25 basis points or 0.25%.
That's right, Rob. The general rule here is that you can buy your rate down at 0.25% for every discount point you purchase. But lenders set their own pricing, so the savings may be more or less depending on your mortgage company.
Right. So to figure out if purchasing points make sense for you, what you want to do is divide your buy down costs by the monthly savings to calculate your break-even point. So for instance here, I've done some math here, but if you're paying $3,000 for one discount point, that saves you approximately $100 per month on your mortgage payment. So your break-even point would be approximately 30 months or 2.5 years, and you would have to remain in the home for at least that long for you to recoup your buy-down cost.
Wow, Rob, I'm impressed.
Thank you very much.
Did your homework. Okay.
I did.
The second way to beat rising mortgage interest rates is consider an adjustable rate mortgage.
Now, this is very controversial these days, but when fixed mortgage rates spike, some borrowers turn to adjustable rate mortgages. They're also called ARMs, and many lenders offer ARM loans with initial teaser rates fixed for a set period. Typically, it's the first 3, 5, 7, or 10 years of a 30-year loan.
That's right. These teaser rates generally are lower than the interest rate charged for a fixed rate mortgage loan.
And let's do an example here too, Frank. Freddie Mac's average for a 30-year fixed rate mortgage right now is 5.78%, while the rate on a 5/1 ARM was just 4.18%, over a full percentage point lower.
The downside, though, is that after your ARM's initial fixed rate period ends, your rate can adjust based on a margin and index outlined in your loan's paperwork. And that can lead to a higher rate and monthly payment down the line.
Yeah, but ARMs do make sense if you plan to live in a home for a brief period, or you want a lower monthly payment ahead of an expected salary raise or bonus. And there are yearly and lifetime caps limiting how much the payment can go up over time.
However, Rob, before our listeners commit to an ARM, they should look closely for any prepayment penalties to avoid getting stuck in an ARM that doesn't allow you to refinance without paying a fee.
That's a very good point, Frank.
Okay, the third way to beat rising mortgage interest rates is use a shorter term loan.
That's so true, Frank. Many lenders, like our preferred mortgage lenders, they do offer mortgage loans with shorter terms, such as 15 or 20 years. And a 15-year loan normally comes with an interest rate that is 0.5% to 0.75% lower than comparable 30-year rates.
And Dave Ramsey's a big fan of the 15.
Yes, he is.
Yes. Another benefit of selecting a shorter-term loan is that you will pay much less interest over the life of that loan and build equity in your home faster.
Yeah, so you'll save big on interest charges compared to a 30-year term loan. However, you need to keep in mind that 15-year loan payments are substantially higher. And that's because you're paying off the same loan amount in half the time.
So basically what we're saying is you want to run the numbers carefully and be sure you can comfortably afford the payments before committing to this type of loan.
That's right. So the fourth way to beat rising mortgage interest rates is make a larger down payment if you can.
Yeah, Rob, a bigger down payment means you're a less risky borrower, which could mean a lower interest rate.
In addition to that, Frank, a larger down payment will result in a lower monthly payment over the life of your loan. Plus, by making at least a 20% down payment, you can sidestep paying for private mortgage insurance or PMI on a conventional loan.
Another potential bonus here is you may also be able to save the $300 to $600 it typically costs for an appraisal, as some lenders offer appraisal waivers when you make a down payment of at least 10%.
Yeah, that's a good point. So the fifth way to beat rising mortgage interest rates is choose a more affordable home or rent out part of your property.
Right, Rob. As we have said before, starting small and just getting your foot in the door with a less expensive home, it's a very smart strategy in today's market.
I agree, Frank. And whether you choose a starter home or a fixer-upper, there's always the opportunity to roll the property over and upgrade your investment into something more significant.
On the other hand, Rob, you can select a larger property and rent out part of your home to help pay for your mortgage.
That's true, Frank. You know, not long ago, I sold a home in Land Park with a 500 square foot ADU, which is an adjacent dwelling unit for you guys that if you don't know. So it's a little tight, like a tiny house. And the owners had rented that out for $1,200 a month. And having an option like that can be very beneficial in a real estate market where interest rates are rising.
Okay, the sixth way to beat rising mortgage interest rates is qualify for a different loan product.
I like this one, Frank. You may be able to get a lower interest rate and make little to no down payment by qualifying for the right loan type. Conforming, FHA, there's VA, and USDA loans, and they can all offer great deals, but you need to find the loan product that best matches your needs.
Yeah, for instance, Rob, FHA loans are usually cheaper if you have a fair or lower credit score, while conforming loan rates are lower when you have excellent credit.
Right, Frank. And a VA loan is also a great option for qualified active duty members, veterans, or surviving spouses. And another loan type is USDA loans, but they are only valid for properties in designated rural areas. And we do have some of those in our areas.
And Rob, we love to work with veterans, and our preferred mortgage lenders are experts at all these loan types. So give us a call at 833-32-RADIO. That's 833-32-RADIO. Let us get you pre-approved and certified for free today with one of our awesome lenders.
Yeah, I had another thought, Frank. If you don't mind tackling home ownership and landlord responsibilities at the same time, FHA loans allow you to purchase a 2 to 4 unit home with just 3.5% down, and you can use the rents to help you qualify, but you have to live in one of the units for at least 12 months as your primary residence.
Yeah, that's a great idea, Rob. Most people don't know that there are so many options.
That's so true, Frank. So why not see where things are for you right now? Call us at 833-32-RADIO. That's 833-32-RADIO. Let us connect you right now with one of our preferred mortgage lenders. Even with rising interest rates, the housing market is changing in your favor as a buyer. And the fact of the matter is, we've had people call us and get pre-approved and certified the same day and out looking at properties within 24 hours.
Not only that, Rob, but we've also had listeners close close escrow on homes in as little as 10 days. So why not call us right now at 833-32-RADIO. That's 833-32-RADIO.
And you weren't lying when you said 10 days. We've had people call us. They've got pre-approved and certified with one of our preferred mortgage lenders that day. They were out looking the next day, and we put them into escrow on a home, and in 10 days later, we were, giving them the keys.
It was bada bing, bada boom.
Bada bing, bada boom, and you can do that. So you can also live chat with us online at RadioRealtors.com. That's RadioRealtors.com. Now, we've got to go to break, but we've got the seventh way to beat rising mortgage interest rates coming up right after this, so don't go anywhere. We've got amazing information for you today on the Radio Realtors. Our number is 833-32-RADIO. That's 833-32-RADIO. Or you can find us online and chat with us at RadioRealtors.com. Back after this. Mortgage interest rates may be going up, but with Sammy Campbell and her team at Preferred Rate, you can still take advantage of a shifting real estate market. At Preferred Rate, they live by this motto, mortgages made simple, and they can help you lower your monthly payment, remove expensive mortgage insurance, or even reduce the length of your loan. All of these things could save you thousands in unnecessary interest, and with home values continuing to climb in Northern California, with Preferred Rate, you can easily tap into your equity to pay off high-interest credit cards, make home improvements, or use it however you like. And get this, if you're ready to buy a home, Preferred Rate makes the pre-approval process super easy and stress-free. Call Sammy Campbell now at 817-778-4592. That's 817-778-4592, or online at informedmortgagefinancing.com. informedmortgagefinancing.com. NMLS ID number 277792, Equal Housing Lender.
Hey, if you need flooring for your home, you need Zotex Flooring. They're your partners as you redesign or remodel your home. Check out their hundreds of amazing reviews on Yelp and Google. Zotex is family run, and their friendly design experts will help you pick a beautiful floor that suits your home and lifestyle. Zotex also has a wide selection of cabinets and countertops. 4 showrooms to serve you: Sacramento, Rockland, Vacaville, and now in Elk Grove. Find them online at ZOTHEXflooring.com. That's ZotexFlooring.com.
If you're like me, and I know I am, you hate to lose. And it doesn't matter if it's your favorite basketball team, your local softball games, or your fantasy football league. When it comes to buying a home, your attitude should be the same, because in home buying, second place is first place loser. Robert Lewis here at the Radio Realtors. We're real estate pros. We like to win, and we'll contribute up to $5,000 of our commission to prove it. Call us or text us at 833-32-RADIO or online at theradiorealtors.com.
This is the Radio Realtors.
I sold the house.
This is a home. This is a place to live. This is a place to live.
Northern California's longest running show on real estate.
Real estate is not just buying and selling houses.
What are you, some kind of real estate agent? Real estate agent?
I love real estate. Ever since I laid eyes on that house, I wanted it.
The Radio Realtors. I love every second.
Now, here's your host, Robert Lewis and Frank Crandall.
Let's go and sell some homes.
All right, welcome back to the Radio Realtors, Northern California's #1 real estate radio show, proudly coming to you live from the Zotex Flooring, Cabinets, and More studios. My name is Robert Lewis, your real estate professor.
And I'm Frank Crandall, your consigliere of real estate.
And Frank, we've got our country's birthdays coming up. And so I just want to say happy 4th, everybody. I'm a flag-waving American, red, white, and blue.
Card-carrying member.
That's right. And excited to be in America.
Amen to that.
So we are talking to you today about 8 ways to beat rising interest rates as a home buyer. And we're going to quickly recap the first 6. The first way is to buy down rate with points. And that's a great thing to do. And we didn't mention it, but we are seeing in this market right now that the sellers are willing to buy down your rate as a buyer in some cases.
And contingencies.
That's right. Right. So there's some very good things that are in your favor right now as a buyer. And that is one of those things. Even though interest rates are going up, what? You might want to be considering buying because, you might be able to get into a home and not have those bidding wars.
They got to have the right realtor, though.
They got to have the right realtors.
Yeah.
And that would be us here at the Radio Realtors, but they also have to have the right mortgage lenders.
That's right.
And we've got our preferred mortgage lenders that are the best. Now, the second way to beat rising mortgage interest rates is consider an adjustable rate mortgage. Now, a couple of years ago, people would have gone, what? I can't believe that you're even talking about that. And that's right. Or even just a couple months ago, back at the beginning of the year, right? Interest rates were in the 2s and 3s. Well, now interest rates are higher. So if you do it the right way, an adjustable rate mortgage can be a good thing. And
yes,
you can always call us and we can tell you all about how to make that work for you. Now, the third way to beat rising mortgage interest rates is a shorter term loan, which is obvious, right? If you get a 15-year or a 20-year loan, well, your payments are going to be higher, but your interest rates are going to be lower. And I will tell you, in 20 years, you pay that thing off, you're going to be pretty happy, right? And then the other thing is you can always refinance into a lower rate down the road, even though maybe the rate is higher right now.
Right.
Now, the fourth way to beat rising mortgage interest rates is to make a larger down payment if you can. Obviously, the more money you can put down, the better.
The underwriters really like it.
Right.
The lenders like it.
Yeah, the lenders like it.
Win-win.
It's a win-win if you can put down more money, for sure. And you can get rid of PMI as well. Now, the sixth way to beat rising mortgage interest rates is qualify for a different loan product. And there are so many different loan products. And sometimes if you go to a bank or a credit union, not saying those places are bad, but they don't all have the same amount of mortgage loan options that our preferred mortgage lenders
They could
do.
be a little restrictive.
They can be. That was very diplomatic the way you said that. So what is the seventh way, Frank?
Okay, the seventh way to beat rising mortgage interest rates is work with one of the Radio Realtors preferred mortgage lenders.
Man, what a segue that is. So this is a great option, Frank, because you may be able to secure a more favorable interest rate if you work directly with a mortgage broker, like we were talking, like one of our preferred mortgage lenders.
True, Rob. Our preferred mortgage lenders can place borrowers into the best program that fits their individual financing needs.
That's right, Frank. For example, if you want a 30-year fixed rate with no points, instead of walking into a local bank or credit union and settling for what they're offering, one of our preferred mortgage lenders can help you get a better deal.
And Rob, isn't it true that our preferred mortgage lenders normally get their loans at wholesale pricing and they can pass much of the savings onto the borrower for a real win-win?
That's right, Frank. They definitely do. So the eighth way to beat rising mortgage interest rates is improve your credit.
Yeah, Rob.
Novel idea, right?
Yeah. Most of the time, the best way to secure the lowest mortgage rate is to ensure that you can qualify for it.
And Frank, you can figure this out by checking your 3 free credit reports and making sure no errors exist, and by paying down credit cards or other debt.
That's right. Any way an applicant can reduce the risk to a lender will allow them to offer the best option available.
And the best way to find out where you stand, and you heard it here last week when we had Larry Chiarella from Titan Credit come in, it's to talk to one of our preferred mortgage lenders and see what your credit score looks like, see what's happening on there. And to do that, all you have to do is give us a call at 833-32-RADIO. That's 833-32-RADIO.
Or live chat with us at RadioRealtors.com. That's RadioRealtors.com.
So here's a wrap up, Frank. After years of decreasing mortgage rates, buyers are now facing rates in the 5 and 6% level. And while those sub 3% rates were initially a godsend for home buyers and people that wanted to refinance, higher rates could be a blessing in disguise for potential home buyers in an overheated housing market. And we're going to give you 4 real quick reasons why that is, Frank.
Right, Rob. Reason number 1, higher mortgage interest rates might be a blessing in disguise is slower home price growth.
Yep, Frank. Last year, home prices increased by nearly 20%, driven by a lack of supply and high demand. And now as rising rates are increasing monthly mortgage payments, home price growth is beginning to cool down as a result.
And Rob, we're beginning to see price reductions in some areas, as well some seller concessions and credits.
You're right, Frank, as well as more inventory. So buyers have a little more power right now, a little more flex.
Okay, reason number 2, higher mortgage interest rates might be a blessing in disguise is less competition.
Right. Higher interest rates mean that some potential home buyers, they're going to be priced out of the market.
Yeah, this is sad news for those people, but good for the buyers that stay in the game.
Right, Frank. However, it also means that there may be more homes in the entry-level price ranges with a whole lot fewer bidding wars.
Yes, sir. Reason number 3, higher mortgage interest rates might be a blessing in disguise, is more housing stock.
That's right. So as demand slows, some homes are going to be staying on the market a little bit longer, giving inventory a chance to build and easing the supply crunch just a little bit.
And while no one is expecting a flood of homes to miraculously appear and wipe out the housing deficit, the signs, they are encouraging.
Right. And we even saw from our good friend, the number one appraiser in our area, Ryan Lundquist, he had a great tweet on this. And he was talking about that it's starting to catch up with pre-pandemic housing inventory. So what is reason number 4, Frank?
Reason number 4, higher mortgage interest rates might be a blessing in disguise, is better savings rates.
Yep. Higher rates also mean that banks should eventually pay higher interest on savings products, encouraging consumers to save and accumulate wealth. So for home buyers, there is a trade-off here.
That's right. Mortgage payments may be higher, but in theory, other costs will be reduced and the savings rate will increase.
Yeah, and we've been in such a low rate environment with rates below 5% for so long. Psychologically, that number can become a barrier. And the last time rates were above 5% was 2010, Frank. But for now, remember that while rates are not as low as they were a year ago, they are still pretty darn good.
The bottom line is when the time is right for you to purchase a home, purchase a home. Don't let headlines or peer pressure influence that.
I agree. Instead, pull the trigger when you can afford the payments, regardless of the interest rate and the house price. And remember, buying a home typically offers a better return on your money than renting ever does.
That's true, Rob.
And if you consider that rents have risen as much as 30% over the last 18 months in the greater Sacramento area, if you purchase a home and you lock in a fixed rate, that mortgage payment will remain the same over the life of your loan, unlike rent payments that are going to continue to go higher year after year.
And think about it. Back in late 1981, mortgage rates hit an all-time high of 18%.
Yikes.
So today's rates between 5 and 6, they pale in comparison.
And in 2000, potential homebuyers were excited that they could refinance their 10 to 12% interest rates down to as low as 7%.
I know a lot of our listeners out there are shaking their heads.
Right.
Because they went through it. So maybe the time is right to buy a home, because even though interest rates are higher, everything else may be in your favor as a potential home buyer.
Right, Frank. Home prices are stabilizing and there is less competition, so that means fewer bidding wars. Inventory is increasing, and historically, interest rates are still on the low side.
And when you consider the fact that rents are up 30%, even with higher interest rates, now could be the ideal time to buy a home.
Right, Frank. And here's the bottom line. With rising interest rates, some potential buyers, they are freaking out a little bit. And we're getting this question a lot. What should we do? Well, our answer is marry the house, date the rate. And from that implied meaning of that statement, marrying is a huge commitment while dating really isn't, right? Committing to your dream home now does not mean you're committing to the interest rate that you get right now forever.
Hey, the bottom line on that one, Rob, is you can change your financing to more favorable terms when the rates are better.
Right. And we know that it sucks getting an interest rate as high as 6 or 7% after seeing the 2 and 3s. But the mortgage rates are adjusting back to pre-pandemic norms. And what smart homeowners do all the time is always be on the lookout for better financing options.
So date the interest rate you can get now, as long as you find the one house to marry. And if they get worse, you'll be glad you married the home when you did.
That's so true, Frank. So buy the home you love and refinance later. Contact us today and ask all your questions, share all your fears with us, and we will explain every little detail and guide you through the entire process. So reach out to us right now at 833-32-RADIO. That's 833-32-RADIO.
Or live chat with us at RadioRealtors.com. That's RadioRealtors.com.
And we'll be back right after this. You know, some things are worth the wait, but in today's real estate market, you don't have time to wait for an inexperienced lender to take 30 days or longer to close your loan. That's why we recommend Jeff Compton. Jeff can close your purchase or refinance loan in 14 to 21 days in most cases. If you want great interest rates, low fees, and a quick close, you want Jeff Compton and Guild Mortgage. 916-765-2900 or online at jeffcompton.com and MLS ID number 298997. Equal housing lender.
Trust the Hawkeye Home Experts. Buying and selling a home can be stressful, but not with Hawkeye. Hawkeye Home Experts make home, pest, and roof inspections a breeze. If you're buying a home, Hawkeye will inspect it and give you a detailed report showing current and future problems that other companies might miss. If you're selling a home, Hawkeye will reveal anything that might get in the way of an easy transaction. Think Hawkeye, your trusted home inspection company. Online at HawkeyeHomeExperts.com. HawkeyeHomeExperts.com. Trust the Hawk.
If you're like me, and I know I am, you hate to lose. And it doesn't matter if it's your favorite basketball team, your local softball games, or your fantasy football league. When it comes to buying a home, your attitude should be the same, because in home buying, second place is first place loser. Robert Lewis here at the Radio Realtors. We're real estate pros. We like to win, and we'll contribute up to $5,000 of our commission to prove it. Call us or text us at 833-32-RADIO or online at theradiorealtors.com.
This is the Radio Realtors.
I sold a house.
This is a home. This is a place to live. This is a place to live.
Northern California's longest running show on real estate.
Real estate is not just buying and selling houses.
What are you, some kind of real estate agent? Real estate agent?
I love real estate. Ever since I laid eyes on that house, I wanted it.
The Radio Realtors. I love every second.
Now, here's your host, Robert Lewis and Frank Crandall.
Let's go and sell some homes.
That's miserable. All right, well, we've got a new segment that we call Ask the Inspector, and fortunately, we have our good friend Ray Overton. He is the owner of Hawkeye Home Experts. And Ray, thanks for being on the Radio Realtors today. We appreciate it.
All right, thanks for having me, Rob.
So we want to get right to it. We actually put out a Facebook post on questions that our listeners wanted answered. So we have a whole list of questions, and I'd like to just get right to it. Does that sound good?
That sounds great.
Very cool. So the first one is from Glenn in Gold River, and he says, who does the home inspector work for, me, the buyer, or my realtor?
Oh boy, that's a good question.
It's a loaded question.
Yeah, that's a loaded question. There's a lot of home inspectors that actually are anti-agents.
Sure.
They feel they only want to work for the home buyer, and they don't even market to agents. They strictly just the buyers. But you know, in reality, we get our referrals from realtors.
Sure.
That's the majority of where our business comes from. But we are ultimately working for the buyer. That's who we work for. So a good inspector, like Hawkeye Home Experts, we don't walk the line there. We keep that pretty straight. You know, the way we deliver our report. Ultimately, we're working for the buyer, and that's who we're liable to.
And sometimes if the seller is the one that does like a pre-inspection or like a pre-listing inspection, then you're working for the seller on that.
That's a whole different,
right?
Yeah, that's a whole different thing.
So it really just depends if the buyer is the one that orders the home inspection, if the seller is the one that orders the home inspection. And sometimes that's good when the seller does order home inspection, because they can see if there's anything that's wrong with the home that they can take care of before the home goes on the market.
Yeah, absolutely. Right? And that's a good point, because once the home transfers or once they close escrow, we're no longer liable on that home as a home inspector, because we were working for the seller at that point. So now the buyers, we're off the hook to the buyer, which is a little bit of an issue. So we're kind of working with that, and we're going to transfer the liability, sign a new inspection agreement with the buyer once we go through the report with them. So that's kind of new, actually, in the Sacramento area. Not a lot of seller inspections are even taking place yet.
And that's sort of a Bay Area thing, because that started in the Bay Area. And now, that's one of the things that we try to do on every one of our listings.
Right.
Because we want to get ahead of the curve there.
Right.
And I think it's a great idea to have you guys come out, because then you're aware as a seller what things are wrong with your home.
Yeah.
And it's make sure you get a clean bill of health on that home, especially in the market that we're in right now.
Right.
Definitely so. So the next question is from Chris in Sacramento. And he says, is the inspector liable in case he or she misses something? And for how long would that inspector be liable?
So we have this inspection agreement that we have to have signed ahead of a time so that our insurance, our E&O insurance, will cover us. When somebody books an appointment, they get immediately sent out this agreement that they get time to look it over, and they have to have it signed before we can start our inspection. So once that time starts, we do the inspection. We're liable for actually California up to 4 years that we're liable, but in our contract it says 1 year.
Right.
That means if we miss something we should have told you about, if it was in our scope of things to inspect and we missed it, let's just say we missed an electrical outlet that wasn't working, and it's within that first year, well, we should have told you about that. We're supposed to check every outlet that's available, that's visible, that's accessible. Now, when a home's lived in, we can't see everything. Obviously, There's rugs down, there's furniture against the walls, and we just can't see everything. But usually the small stuff, it's not a big deal. It's the big things. It's the big structural issues, the big roofing issues, the big heating and air issues, electrical issues. If we should have told you, hey, your electrical panel is messed up and you got these safety hazards going on, we're definitely liable for that.
Gotcha.
Especially if we did a pre-sale inspection, the buyer might get their own home inspector to come behind us. So now let's say the home hasn't transferred yet and that new inspector comes in and says something about the electrical panel and we never said anything. Well, now the seller comes to us and says, hey, why didn't you tell me about this? This other inspector said this is wrong. So now we're liable to that seller.
And that's as long as, you could come back and take a look at it, and then you could potentially disagree with the assessment that the other home inspector made, right?
Yeah, absolutely. There is no licensure for home inspectors in California.
Right.
So you might get some guy that thinks he knows what he's doing, and he's going to call something out that is erroneous. It's not even true. So, but it would be up to me to have to prove, this is not a correct call, or yes, I missed it. I should have told you about this. I didn't know about it.
Right. And one of the great things about your company with Hawkeye Home Experts is that your reputation is so solid. And that's one of the best things about you guys is that your reputation is so good. It's so, sterling. You got, very good reviews.
Yeah.
So.
Yeah, we've been around a long time, over 22 years.
That's great. All right, the next question, it looks like it's from Janice in Auburn. And Janice is asking, is my home inspector allowed to work on my house and fix the things that he found?
Sure he can, after a year after the inspection.
Now, why is that? That's a great question because, you would think that a home inspector could maybe even just fix things as they go to help you out.
Yeah. Well, it's a conflict of interest.
Okay.
So they don't want a home inspector to come in and say, hey, all this stuff's wrong with your house. And by the way, I can fix it for you, and this is the cost. The homeowner doesn't know. So they're relying on that home inspector to be trustworthy and honest. Well, we all know there's a lot of untrustworthy people out there. So that's the purpose of that. That's a state regulation.
Now, got a question for you. So how do you work with that? Like, let's say they say, hey, can you fix these things? You cannot do that, but can you refer them to somebody that can?
Yeah, we have a certified property pro list of contractor referrals that we use, that we've made relationships with. We fully vetted these contractors out. And we did that just for this reason, because basically when a home inspector comes in, he tells them all this stuff that's wrong with the house, and then he leaves and they never hear from him again. And there's no support for them. So they really rely on the realtor after that point to help them to navigate through all this stuff. And hopefully that realtor is experienced, has, relationships with contractors that they can get somebody out there. And you all know you're on a tight timeline. So you may only have a week or maybe a couple days to get these contractors in. So yeah, we built this contractor referral list just for that reason. That's
a great thing to have. And that was something I did not know. I thought that you could just, go ahead and fix. And I know in the past we've had inspectors where they fix things.
Yes.
So that was a conflict of interest.
It was,
that's
against, illegal, actually.
Yeah, it's illegal, yeah. So you don't want to do that. Well, that's
now,
good.
One point, though, on that is the termite company and the roofing company. If we had a roofing contractor, which we do, and we own a termite company as well, now we are allowed to go ahead and do the repairs on those.
For termite and
just
roofing?
Termite and roofing.
That's good. Okay, yeah. So if there's dry rot or termites or anything like that, you guys can go ahead and treat and fix those things. Good deal. So I think we got time for one more question. And the next one is from Gail in El Dorado Hills. And Gail is asking, is my home inspector required to have insurance?
No, he is not.
Really? Okay.
Actually, not in California. There is no state licensure, no regulation for home inspectors yet. 2025, they passed a law or a bill, I'm not sure which it is, but in 2025, we will become a regulated state. And then all home inspectors will be required to be licensed and insured and all those things. But right now, no requirements to be insured. And
you guys have, you said E&O insurance, so it's just errors and omissions.
Correct.
So if you make a mistake and it's proved that you did, then you have insurance that covers that. So you don't have to be insured.
Do not.
But you guys are.
We are.
Excellent.
Yeah. And there's actually a lot of home inspectors that choose not to be insured because when you get pulled into a lawsuit, they're looking for the deep pockets.
Right.
So there's kind of a strategy there for home inspectors that I'm not going to be insured. That way, if I do get sued, they know I don't really have much to go after. So
yeah. Well, so it's good.
It's a tough one.
And it's also reputation, right? So, I mean, if you do good work and you do good inspections and you stand behind it, then you shouldn't be having any issues.
You know, when I first started in home inspection, I went to a training school in Oceanside, and they told me right at the gate, it's not if you're going to be sued, it's when, as a home inspector.
Right.
So,
well, it's kind of is it a litigious or litigious? Litigious society, unfortunately.
Yes, it is.
Well, we've got to go to break, but if you have a question that you want to ask the inspector, and that's Ray Overton from Hawkeye Home Inspections, you can give us a call here at 833-32-RADIO. That's 833-32-RADIO. Or you can find us online at RadioRealtors.com. That's RadioRealtors.com. And you can always check out Hawkeye Home Experts website. And the website is really easy to find. It's HawkeyeHomeExperts.com. We are the Radio Realtors, and we'll be back right after this.
Mortgage interest rates may be going up, but with Sammy Campbell and her team at Preferred Rate, you can still take advantage of a shifting real estate market. At Preferred Rate, they live by this motto, mortgages made simple, and they can help you lower your monthly payment, remove expensive mortgage insurance, or even reduce the length of your loan. All of these things could save you thousands in unnecessary interest, and with home values continuing to climb in Northern California, with Preferred Rate, you can easily tap into your equity to pay off high-interest credit cards, make home improvements, or use it however you like. And get this, if you're ready to buy a home, Preferred Rate makes the pre-approval process super easy and stress-free. Call Sammy Campbell now at 817-778-4592. That's 817-778-4592 or online at informedmortgagefinancing.com. informedmortgagefinancing.com. NMLS ID number 277792, Equal Housing Lender.
Hey, if you need flooring for your home, you need Zotex Flooring. They're your partners as you redesign or remodel your home. Check out their hundreds of amazing reviews on Yelp and Google. Zotex is family run, and their friendly design experts will help you pick a beautiful floor that suits your home and lifestyle. Zotex also has a wide selection of cabinets and countertops. 4 showrooms to serve you: Sacramento, Rockland, Vacaville, and now in Elk Grove. Find them online at ZOTHEXFlooring.com. That's ZotexFlooring.com.
Hi, this is Jerry with Chim Chimney Professional Fireplace and Home Services. Last year was our best ever, and to show our appreciation, we're offering discounts for all your spring cleaning and honeydew list. We're called Chim Chimney, so of course we do chimney cleaning and repairs, but we're also the trusted pros at rain gutter cleaning, dryer vent cleaning, pressure washing, tree trimming, and junk removal. Call us today at 916-247-6579 or online at thechimchimney.com. That's thechimchimney.com.
This is the Radio Realtors.
I sold a house.
This is a home. This is a place to live. This is a place to live.
Northern California's longest running show on real estate.
Real estate is not just buying and selling houses.
What are you, some kind of real estate agent? Real estate agent?
I love real estate. Ever since I laid eyes on that house, I wanted it.
The Radio Realtors. I love every second.
Now, here's your host, Robert Lewis and Frank Crandall.
Let's go and sell some homes.
All right, welcome back to the Radio Realtors, Northern California's #1 real estate radio show. We're coming down the home stretch, and we're proudly coming to you live from the Zotex Flooring, Cabinets, and More studios. My name is Robert Lewis, your real estate professor.
And I'm Frank Crandall, your consigliere of real estate.
And Frank, you know what? I didn't even realize we were doing this when we were going over with our producer on what we're going to be talking about. But we talked to you about marry the house and date the rate. Well, we're talking about divorcing. So divorcing the house.
This ought to be good.
It's definitely interesting. And you know, it does happen, but marriages do fall apart. And I'm so blessed. I've been with the same amazing woman for 30 years. I don't know how she puts up with me. And I know you've been married for how long?
Same, 30 years.
30 years, man. So we got 60 years of marriage under our belt.
Yeah, our wives are saints.
Yeah, no, they
are.
They definitely are. And what's really, really funny, Frank, is that I had somebody that was asking me about dating advice a couple of days ago. And I'm like, what would I know about dating advice?
Oh, haven't you heard the latest?
What?
Don't go to bars. Go to Target.
Target is where you go?
Target is where you go. That's supposedly what it is.
Wow,
so.
Okay. All right. Yeah. In the produce section, you walk up to a lady that she's in the freezer section, and you go, hey, don't stand so close to this stuff. You're going to melt all this stuff. My Blue Heaven, right? Remember that? Great movie. But,
Killing me over here.
But it does happen. Marriages fall apart. And as if dissolving your union isn't difficult enough, if you own a house together, almost certainly your largest joint asset, you're going to also have to decide on what to do with it. Do you stay? Do you sell? Or hand over the ownership to your ex?
And Rob, while there's no one-size-fits-all solution when it comes to dividing the house during a divorce, there's multiple options that will allow you to move forward with a roof over your head.
Right. So let's take a look at some of the different ways couples can take on dispersing the household.
Option number 1 is sell and split the profit.
Yeah, selling the home and dividing the profits is often the least messy of all possible scenarios, Frank. A lot of financial advisors and attorneys recommend that clients just sell the house.
That's right, Rob. Selling your home and dividing the profits can often be the simplest way to solve the problems. Everyone gets their share, and there is no lingering joint debt to resolve.
Yeah, still, there are some caveats to keep in mind. First, if you're trying to sell during a down market, when your house is likely to sit on the market and you stand to lose money, consider moving out and renting the property out instead.
And Rob, on the other hand, if you're selling at a profit, you'll want to watch out for the capital gains tax, although the bar is pretty high.
Yeah, true. And an individual can exclude up to $250,000 in capital gains on the sale of a primary residence, and a married couple filing jointly can exclude up to $500,000. So depending on when your divorce is finalized, you might have some flexibility there.
And those making a profit might also consider agreeing to use that money to pay off the legal expenses of your divorce.
Yeah, that said, Frank, many people are understandably attached to a home, or they decide that remaining in it is best for the kids, in which case you consider this next option.
Nice segue into option number 2, buy out or get bought out by your spouse.
Yeah, and before you make the decision to stay and possibly buy out your partner, it's important to find out if it's financially viable for you. In addition to that, it's important to try and remove emotion from the equation as much as possible.
Yeah, easier said than done.
Right, Frank. We had a client who wanted to stay in her 4-bedroom home, but in 2 years her children would be leaving for college, and her attorney asked her, do you really need that big of home with all those rooms? Would it be smarter for you to sell your home and buy a smaller home or maybe even a condo in the same community?
Those are good questions, Rob, but whether you're the partner staying or going, you want to make sure the buyout terms, which will include a professional appraisal of your home's value, are fair and accurate.
And when it comes to a buyout, Frank, you have to be incredibly careful because there's no actual sale involved. So the bottom line figures, they can be very skewed sometimes. Think about how many homes are listed and don't sell at that price point. You know, until there's a buyer willing to pay actual money, it's just a number, and you're banking your future on that number.
So what we're saying here is if the amount being offered doesn't sit well with you on either side, experts encourage you to get another appraisal.
Right, Frank. It's much like seeking a second opinion from another doctor before you move forward.
Okay, option number 3 is a delayed buyout.
Yeah, so this is the option if you or your spouse want to stay in the home but aren't in a position to purchase it at the moment. You can arrange this thing called a delayed buyout.
Yeah, Robin, in this scenario, the spouse that stays simply continues making the monthly monthly mortgage payments until they can afford to buy out the other, or until the kids move out and they are ready to sell.
Yeah, but this option also has its own headaches, Frank. It can lead to a lot of potential issues if people aren't careful. Since this arrangement can last years, there can be plenty of arguments about how the house is being cared for.
Or even worse, Rob, if the partner who stays starts dating someone, can that person move into the home?
And if you're the spouse who's allowing your former partner to stay in that home, you're in a vulnerable situation should something go sideways. The biggest issue is that your name remains on the mortgage.
Yeah, and if your ex doesn't keep up the payments, then you're liable. It can ruin your credit rating if payments are missed or if the home is foreclosed on.
Yeah, and that might affect your ability to buy another home. So the best policy to avoid any messes is to hash through all the what ifs with an attorney and come up with a written plan of action.
You need to know the answers to some questions like who will do and pay for the repairs, and what if mortgage payments can't be made?
Right, Frank. And as long as these worst case scenarios are addressed, no one's going to be left holding the bag or the house.
That's right.
Yeah.
Option number 4 is divide the house. Literally.
Yeah. Do you remember the Brady Bunch, Frank?
I sure do, Rob. They were the inventors of the Zoom call, right?
Yeah, it seems like it, Frank. But do you remember that Brady Bunch episode where Peter decides to divide the room he shares with Bobby in half? Do you remember that one?
Yeah. Didn't Peter try to divide the room with masking tape or something like that?
Yeah, exactly. And of course, it's a funny episode, but both the brothers quickly figure out when they cut that room in half that each loses access to some of the things that they need.
The opposite of this happy ending episode of the Brady Bunch is the movie, The War of the Roses, with Michael Douglas and Kathleen Turner. I bet you remember that one.
I certainly do, Frank. That movie was funny, but tough to watch because the couple, their names, I think they were Barbara and Oliver Rose. They were married for like 17 years, right?
Yeah, but after 17 years, the once inseparable lovebirds seemed determined to let all those years go down the drain. They desperately wanted out, except for one slight problem.
And what's that, Frank?
Well, Rob, neither Oliver nor Barbara is willing to leave empty-handed.
Right, so what happens is there's an explosive head-to-head like civil war between the sexes with their lavish mansion as the precious spoils of war.
Without a doubt, theirs is a sad story. However, attempting to live together post-divorce can pose plenty of challenges.
Right. In real life, trying to cohabitate after divorce or in the middle of one like the War of the Roses, it's a lot less entertaining, and it doesn't even have that laugh track that we often see. So
yeah, some couples choose to live together in a home after divorce, and if they can't sell it, and neither can afford to live somewhere else until it sells.
And even though I've never experienced it, Frank, it seems being roommates after a divorce could prove to be extremely complicated, both emotionally and practically. I mean, how will you share common spaces? Can you have guests over? How will you share all the upkeep costs?
Right, Rob. There's a lot to work out. Most people find this is harder to do than it initially seems.
Yeah, so Frank, here's where the Radio Realtors Robert Lewis and Frank Crandall with EXP can help you. Emotions run high in any real estate transaction. And when you add the element of a divorce, it adds a whole new level of stress. So our initial consultation with you can be a series of one-on-one meetings with each individual spouse, meetings with a spouse and your attorney, meetings with the individual attorneys, and a conference room meeting with all the parties involved.
The next thing we do is give you the value of your home. Knowing the value of your home is vital during a divorce as it relates to the division of assets.
Yep, Frank, and we have provided hundreds of broker price opinions that have been used in divorce court proceedings and during negotiations between parties.
That's right, so feel free to contact us at no cost and no obligation home evaluation that can be used in court to demonstrate the estimated market value of your home.
And the other thing we offer you is absolute discretion, Frank. It has been said that a divorce is the death of a dream, and everybody grieves differently. So we approach each spouse with absolute courtesy, non-partiality, and with total discretion.
Yeah, no one needs to know your business. If you're a high asset individual or celebrity with real estate, protecting your privacy, your finances, and intellectual property during the divorce is our priority.
And when a marriage is ending, Frank, selling the family home has the potential to get incredibly combative. And it takes the help of a patient, communicative real estate agent to keep the home sale sailing smoothly through the rocky seas of divorce. So the good news is that you don't have to go about finding this type of agent alone. You've already found them here with the Radio Realtors, Robert Lewis and Frank Crandall at eXp Realty.
So if you're unsure what to do with a house, Start with a free home value estimate from the Radio Realtors. Just call us right now at 833-32-RADIO. That's 833-32-RADIO.
And all you need to do is give us your address and answer a few questions about your home, and we're going to provide a preliminary estimate of the home's value, and we can do that in just a few minutes. So call us right now at 833-32-RADIO. That's 833-32-RADIO. Or you can live chat with us online at radiorealtors.com. That's radiorealtors.com. And unfortunately, that's all the time we have for this show.
Happy 4th of July, everybody.
You know, some things are worth the wait, but in today's real estate market, you don't have time to wait for an inexperienced lender to take 30 days or longer to close your loan. That's why we recommend Jeff Compton. Jeff can close your purchase or refinance loan in 14 to 21 days in most cases. If you want great interest rates, low fees, and a quick close, you want Jeff Compton and Guild Mortgage. 916-765-2900 or online at jeffcompton.com and MLS ID number 298997. Equal housing lender.
Trust the Hawk, Hawkeye Home Experts. Buying and selling a home can be stressful, but not with Hawkeye. Hawkeye Home Experts make home, pest, and roof inspections a breeze. If you're buying a home, Hawkeye will inspect it and give you a detailed report showing current and future problems that other companies might miss. If you're selling a home, Hawkeye will reveal anything that might get in the way of an easy transaction. Think Hawkeye, your trusted home inspection company. Online at HawkeyeHomeExperts.com. HawkeyeHomeExperts.com. Trust the Hawk.
In this crazy real estate market, if you're even considering selling your home, you need options.
Because the fact of the matter is, selling your home is not one size fits all.
And at the Radio Realtors, we're all about options.
Yeah, maybe your home is in great condition and a traditional sale with a targeted marketing approach that gets you multiple offers over list price is what you want.
Or maybe you would sell if you had the perfect home to move to. Then our Dream Home Finder program is your best option.
Or maybe your home needs a little sprucing up to get top dollar. Then our quick fix and list option, where we pay for the repairs up front, is what you need.
Or maybe you have a house that's a real fixer and you just don't have the time, energy, or money to deal with it, and you need a competitive all-cash offer.
We do that too.
And just like you, we hate pushy salespeople.
And we hate gimmicks.
But we do love helping you get a premium for your home, whatever your situation is. Call or text us right now at 833-32-RADIO.
That's 833-32-RADIO.
833-32-RADIO.
Hi, this is Jerry with Chim Chimney Professional Fireplace and Home Services. Last year was our best ever, and to show our appreciation, we're offering discounts for all your spring cleaning and honeydew list. We're called Chim Chimney, so of course we do chimney cleaning and repairs, but we're also the trusted pros at rain gutter cleaning, dryer vent cleaning, pressure washing, tree trimming, and junk removal. Call us today at 916-247-6579 or online at thechimchimney.com. That's thechimchimney.com.